back to the channel. In today's video, we're going to be speaking about market behavior and how the market is designed. Because people tend to think that the market is designed, whereas what we're going to do, we're going to open the chart at any time in the morning, see a setup, and place the trade without doing no back testing or nothing. The market's not designed like that. The market really works on human behavior and news and other fundamental things that fluctuate where the market's going, if it's going up or it's going down. But the market is one thing, it's not designed for you to literally boom, open your chart, boom, place a trade and be in profit. It's not designed that way. If it was designed that way, everyone would be millionaires. But don't worry, let's head over to the charts and let's break down a few fundamentals. Alright guys, let's talk about Forex market behavior. Now the market is a sensitive place. I'll be honest, it's a very sensitive place. Now, this is the daily Euro USD. Now, a lot of the behavior of the market is from us. It's from us, banks, big institutions, hedge funds. We push the market around. On top of that, the news also pushes the market around. But the news, again, people listen to the news and make a decision on that. Or they place a trade off of the news, and this is what moves the market around. Now, we can't be fooled out by this. We have to stick to our strategy and know exactly what we're doing. Now, let me show you a typical market behavior where traders go wrong. Let's see. Okay, let's take this section here. As we can see, it's a typical market behavior. At this point here, the market started to change direction. It was going bearish, it hit this support, and now it started to go bullish. Then it hit this resistance, and what happened? It started to go bearish. But as we can see now, it is very, very bearish. But this particular candle, the one with the big wick, the reason why it has a big wick, because of news. A news report or a news feed or information on the Euro USD or anything that can affect the USD came out. Now, if we place the trade anywhere around on these two candles or the third candle, and we said, you know what, we can see it's going down, we're going to ride it down. Boom, the market behavior kicks in. It fakes you out. This whole wick would have been green all the way up to here. Now we're talking 277 pips. Now, are you telling me you're gonna hold that 277 pips out of the money? Well, don't get me wrong. If you know what you're doing, you will. If you know where the market is truly going and you believe in the move, you will. But if you're not used to market behavior and the market makers pushing around the market to where it wants to go and to fill a lot of people's stop losses, then you'll hold. Now, if you're a new trader and you saw that, you'll definitely get out. It's all about protecting your account. Even myself, I'll get out, because the way that shut up in one day, that was just straight news. Market behavior, it does it all the time. Not all the time, but often, I should say. So realistically, if you place a trade around here, your stops are going to be above the resistance. So they would have stopped you out. A lot of traders, their stops would be above the resistance. And the market would have stopped you out. So what we mean by also filling orders, all of these will be stop loss orders that the market would have filled, would have hit, taking the trader out of that particular trade at that moment. But then, by the end of the day, that 200, was it 270? That 277 pips negative switched straight back around again by the end of the day, and it would have closed, say, roughly 122 pips in profit. But now, the market at that moment, after it had its temper tantrum, it started now to excel downwards. The momentum really started to hit downwards. And you would have gained, on top of the 120 pips, you would have gained the extra 145 pips, give and take, you know? So this is what I mean by market behavior. Don't let it kick you out of the money. Do your analysis, do your back testing, and make sure you understand the move you're in already, the trade you're in. Because with any trade you go in, if it's short term or long term, there may be some sort of turbulence. And you have to be able to understand why the market is doing that, what time of the day the market is doing that, and is it a high possibility that the market will continue to go back in the direction that you're trading. So yeah, guys, we'll leave that video today. If you haven't yet subscribed to the channel, please subscribe. If you haven't yet, smash that like button. Boom! Go smash that like button. More content is coming every week, and I'll catch you in the next video.